I get it. Right now, there is a lot of confusing information out there about the Atlanta real estate market. You're seeing prices for homes that are currently on the market dropping. You're seeing homes are sitting on the market longer than ever. And here's the one thing that's going to surprise you. What if I told you prices just hit a record high? Not dropped, a record high. Here's what that actually means. It doesn't mean every home in Atlanta got more valuable overnight. It means that the homes that sold in June sold for a higher average price than ever before. That's the whole story. Sales price and home values are two very different things, and mixing them up is where a lot of the confusion out there comes from. So I pulled the real June numbers straight from our FMLS for Atlanta inside the perimeter. Let's walk through what's actually happening. And just a quick note on where this data comes from before we get too far in this. FMLS, which stands for the First Multiple Listing Service, is the actual database agents in Atlanta use to list and close every one of these homes. It's not an estimate from a website, it's the real verified transaction data. Every month, I pull the full FMLS data set. I split detached homes from attached, so condos and townhomes, because that split is exactly where all this confusion is coming from. And quick definitions so we're all on the same page. When I say detached, it means standalone, your single family houses, no shared walls. Attached means anything sharing a wall or structure with another unit. So I'm talking about condos and townhomes and that kind of thing. Two segments moving in opposite directions, getting reported on as one market. Here's what's really going on in each. Some quick history for you because I think this will help explain where we are and where we're going. This year feels very different. I get it. Before 2020, detached days on the market in this data normally set somewhere between 70 and 110 days, even in the fast summer months. Then the pandemic hit, and by 2021, days on market had collapsed to under 20 days at the low point. Homes were going under contract almost the day they hit the market. We all know that. And prices climbed right alongside with them. But here's the thing, every year since has slowly climbed back toward normal. This June, detached days on the market was 54, meaning from the time it came on the market, it took about an average of 54 days to go under contract. Much faster than pre-2020 norm, but more than doubled the 2021 bottom. So for our attached homes, or our condos and townhomes, this actually tells the more surprising story. Well, it may not surprise you if you have been feeling this. This June's 78 days on the market is longer than we have seen in years, even before the pandemic ever started. So when people say homes are sitting, for condos and townhomes, that's absolutely true, and I think it's fair most people are feeling that. So let's talk about our detached homes, so our single family homes inside the perimeter. Right now, just under 22,000 active listings at the end of June. In early 2023, we were under 10,000. Inventory has more than doubled in 3 years, and it has climbed every month this year from around 17,000 in January to just under 22,000 by June. But listen, we always see that uptick in inventory because, as we know, most people that want to sell list their homes in the springtime. So those numbers aren't that surprising for this time of year. Let's look at attached. Just over 6,200 active listings, up from barely 2,000 at the 2023 low, and also climbing every month this year. So here's the quick math. 6,035 detached houses sold in June. You divide that into the 22,000 active listings, and that's roughly 3.5 months worth of supply. So 6 months is generally considered a more balanced market. So it doesn't favor buyers and it doesn't favor sellers. So we're not quite there, but this is the highest supply than we have seen in years. So out of the 6,200 attached active listings, just a little under 1,200 of those sold in June. So we're over 5 months worth of supply. That segment is much closer to balance. Here's what that actually means. If 0 new condos or townhomes got listed starting tomorrow and they kept selling at June's pace, it would take about 5 months to sell through everything sitting on the market right now. 6 months is the number agents usually call balance. Not tilted towards the buyers or the sellers, like I just said. Detached is sitting at 3.5 months, so we're still technically favoring the sellers right now. Attached is at 5. So the condos and townhomes aren't in a full buyer's market yet, but we're the closest that we have ever been to it. So if new sellers aren't flooding in, where is all this extra inventory coming from? It's homes that aren't selling, but they're not coming off the market. Sellers are just letting their homes sit. That's the real story behind the record inventory number. It's not a rush of new sellers, it's just a backlog. That 3% drop in new listings is about 2,500 fewer homes hitting the market so far this year compared to last year. That counts as a real decline, not flat, so fewer people chose to sell this year. But 2,500 out of tens of thousands isn't big enough by itself to explain a record high inventory number. The bigger piece is homes that aren't selling are just sitting there, which is what I will talk about next. So for our single family homes, June's average sales price was $559,854, highest June on record, up from $546,341 last year. Quick reminder, that's an average of what actually sold, not an appraisal of every house in town. It doesn't automatically mean your specific home values jumped by that same amount, but it does tell us that buyers are still paying top dollar for the right houses. Year to date, single family homes are up, so their prices are up 2%. In real dollars, that's about $10,000 on average than this time last year. That counts as genuinely up, not flat. It means that single family homes prices are still climbing, but just not as fast as they were. So for our attached houses, June average sales price was $393,446, basically flat against $390,037 last June. But that's small enough to call flat. But year to date, attached prices are actually down 3%. So on average, we're talking about a little over $12,000 less than they were this time last year. That's a real decrease, not noise. Attached prices didn't just stall this year, they actually lost ground. And I think everybody trying to sell a townhome and a condo right now is 100% feeling the squeeze. So you would think with all of this talk about homes sitting and prices dropping in some categories that sales must be crashing too. But here's the thing, they're not. A little over 6,000 detached homes sold in June, and that's up 1% from this time last June, which is about 70 more houses closing than this time last year. Attached sales were down 1%, so about 9 fewer sales than this time last June. Both of those really count as flat. When a number moves 1% either direction on a total this size, that's a normal month-to-month wobble, not a trend. In plain terms, sales aren't crashing and they're not booming. They're holding steady in both categories. If you look at the actual sales trend for single-family homes this year, it's tracking almost exactly on top of 2024 and 2025. The reason this year feels so different is that everyone's still comparing it to 2022 when the market was so hot that sales volumes in a single month hit over 7,100 in closings. But that was the outlier. What we have now isn't a collapse. It's a return to a pace closer to normal that looks slow standing next to an abnormal year. Let's look at time on the market and stuck listings. Expired and withdrawn listings are up in both categories. Single family homes expired listings went from a little over 1,500 to just over 1,600. Withdrawn went from a little over 2,000 to a little over 2,100. Attached, so again, our condos and townhomes, expired went from 562 to 604. These are homes that came off the market without selling. And combined that with what we just covered on new listings, this is actually a source of the inventory buildup. Here's the question I get asked the most. Are there just fewer buyers out there? And my honest answer is no. Detached closings are actually up slightly this year, and attached is basically flat. If buyers had disappeared, then sales would have dropped hard, and they just haven't. Even contract activity this spring, so February through April, ran higher than the same months last year before it cooled off for summer. So here's what actually changed. Inventory grew a lot faster than the buyer pool did. Roughly the same number of buyers are now spread across a lot more homes. So every listing has to work harder to get noticed, and that's where the pricing comes in. The homes that end up sitting on the market or expiring, they're just priced wrong. Well-priced homes are still moving fast, which is exactly why detached prices hit a record at the same time that inventory doubled. It's not that nobody's buying, it's the fact that buyers finally have enough options to walk away from a home that's priced wrong instead of competing for anything that comes on the market like they did back in 2021 and 2022. So where the buyer activity is actually concentrated, this is interesting. It is worth knowing that if you are shopping detached, so single family homes over the last year, so let's say in the $350,000 to $400,000 range, has consistently had more homes go under contract than any other price bracket month after month. And this spring, so February through April, contract activity across almost every price band jumped well above the same months last year. This year had a real spring rush and it just settled down by June. So I know if you're still with me, thank you. I know this is a lot of data and a lot of numbers to go through, but here's what I think it actually means pulling all of this together. This isn't a crash and it isn't the frenzy of 2021 and 2022 either. It's a market split into two different stories that used to move together, plus a backlog problem sitting underneath both of them. Single family homes is still tight enough that a well-priced home sells at a record average price. 22,000 active listings hasn't slowed that down, and closings are actually up slightly from last year. I don't think that changes just because inventory keeps climbing, because a lot of that inventory isn't new sellers, it's homes that haven't found the right price yet. Attached homes is the segment actually absorbing most of this slowdown. 5 months of supply, days on market up double digits now, and running longer than some pre-pandemic years, and a rising number of listings expiring or just getting pulled off the market. That's a market where sellers are losing the negotiation, whether they've adjusted their expectations yet or not. If you're looking at only one number, you'll get the wrong story, because prices are up and homes are sitting are both true right now, just in different corners of the market. These sprint years of 2021 and 2022 are over. This is our new pace. I would rather you make a decision based on where your specific price point and your property type actually sit in these numbers than on a headline about the market that doesn't really exist as one single thing anymore. If you would like to work with me, my information is in the description below. And hey, if you like this video, then go check out this next one. I go over the neighborhoods that people are leaving and where they're going. I will see you over there.